Hello, my name is Jingo Nelly, and today I'm going to be beginning off with topic 1 of auditing. So make sure you subscribe to the channel. It will bring you some good luck in your forthcoming exams. So beginning off with the course outline. Uh, so with the introduction to auditing, we're going to be looking at the nature and the purpose of auditing. Uh, with this, you're going to be looking at the definition, the difference between auditing and accounting, demand for auditing, assurance and advisory services provided by auditors, then the elements of assurance service, types of assurance services, that is to do with audit and review of financial statements, then advisory services, that is to do with bookkeeping, compilation, taxation, consultancy, then the types of audit, and then objectives of the auditor, and the concept of true and fair view, then the benefits and limitations of auditing. So we shall be looking at the introduction, then the topic 2 will be audit framework in Uganda, and then we're having the third one, which is audit planning and risk assessment. So having after looking at those three, we shall be having our coursework 1. So looking at this, the introduction to auditing, by definition, auditing can get to have so many definitions. It can be defined as auditing is an assurance service carried out by an auditor to give an independent opinion on financial statements of an entity. Now, with this, what do they mean by insurance service? So, with insurance service, it means that they're going to examine financial statements and give an assurance that that is going to be true and fair. So with the assurance service, it looks at that. Then still in this definition, I can get to look at an independent opinion. With this independent opinion, basically looking at independency of an auditor. This auditor has to be separate from the firm he or she is auditing. So previously there will be other members, or I can call them the agents, the shareholders employed in a firm. So at times you can look at maybe the accountants, accounting managers being employed in a particular firm. So these managers can get to report to the to the shareholders. Let me take you to the diagram. So here, this is what I'm talking about. The agents can get report to the shareholders. So with them reporting to the shareholders, they get to prepare financial statements which they present to the shareholders. So in return, the shareholders at a particular point T, they can decide to employ the auditors in order to see in order to verify whether the financial statements that were provided are precise, in that they provide a true and fair view. So with that, this is when an auditor gets to give an independent opinion which is separate from those members that are in that organization. So with this, the auditor, following this diagram, the auditor can get decides to give information that verifies the financial statements which were earlier provided by the managers in that particular firm. So through that, they can get to give their own independent opinion on those financial statements of that entity. So looking at an audit is carried out by an auditor to express an opinion on whether the financial statements give a true and fair view of the financial position, of the financial performance, and also the cash flows of an entity. So we shall always be looking at these statements, these financial statements, that is to do with the financial position, financial performance, and the cash flows of an entity that are being prepared in accordance with the financial reporting standards and laws. So before I continue, auditing itself, the word auditing comes from a Latin word called adere, which means to hear. So with this, auditors get to talk through making the audit reports. So through these audit reports, they can get to be heard. That is by providing them to the shareholders, as I showed you in the diagram. So with this, I can move on. So these financial statements being prepared in accordance with the financial reporting standards and the laws. So which financial reporting standards apply to what, and which laws apply to what? So with this, we get to look at the private sector and the public sector, and still with the laws, we get to look at the private sector and the public sector. So in Uganda, the applicable financial reporting standards are international financial reporting standards for the private, that is to do with the private sector. For the private sector, we look at the international financial reporting standards, and then with the public, we look at the international public sector accounting standards. So when it comes to the laws, with the private, we look at the Companies Act 2012, and with the public sector, we look at the Public Finance Management Act of 2015. So auditing, and also define it as a process of obtaining sufficient, appropriate evidence on financial statements. I told you the financial statements you can look at, the financial position, financial performance, and also the cash flows. So it's meant to give sufficient evidence on the financial statements from the entities, accounting records, and external sources. So an auditor gets to give an independent opinion on financial statements in an audit report. So remember, I told you earlier on, there are other members, that's to do with the agents. They get to prepare financial statements which they present to the shareholders. So with that, the shareholders wanting to verify whether these statements are correct, that's when they employ the auditors to come and give their own independent opinion. And this is done through the audit report. So we are also having an audit report provides assurance on whether the financial statements are free from material mistakes. And with material mistakes, it's a combination of errors and fraud. So the audit report, it must provide that assurance. And then another one, an auditor must be competent and independent of the entity audited. So with this, with the competent deals with we're having a lot of experience. You know, auditors are knowledgeable people. They must have a lot of experience in the field to do with accounting. So, and also they must be independent of the entity being audited. So we look at something else that is to do with the differences between auditing and accounting. So with this difference between auditing and accounting, we can look at the two definitions. So with accounting and auditing, generally accounting deals more with preparing or the preparation of financial statements, and auditing deals with examining these financial statements so that they provide assurance. Then by definition, accounting is just deals with reporting of transactions and preparation of financial statements to facilitate decision making. And then with auditing deals with giving an assurance service, and this assurance service is carried out by an auditor to give an independent opinion on financial statements of an entity. So with that, then number two, they can decide to ask for these differences, 5 marks. So we are having the second one, which deals with the recording transactions and the preparation of financial statements are done by the entity in accordance with the financial reporting standards and laws. We had already looked at this earlier on. What applies to what applies to the private sector, what applies to the public sector, and even the laws that are applicable to both of to the private sector and also the public sector. So the transactions being recorded must be in accordance with the financial reporting standards and also the laws. Then when carrying out auditing on the financial statements and the books of account, an auditor collects audit information on the compliance with the IFRSs with the guidance of the international standards on auditing. Having looked at that, to do auditing relies on accounting. So when if I told that to handle a specific if I told that to do auditing, for example, they are going to do auditing to verify whether the property was accurately accounted for. So here they're not going to use international standards on auditing. They're going to first apply the financial reporting standards, and then when they are doing the auditing, that's when the international standards on auditing come in as a way of guiding. So an objective can be set in such a way. They can ask you the criteria used in the external audit of historical financial statements of a company are A, international financial reporting standards, the generally accepted accounting principles, then company's policies used in preparation of financial statements, and then D, which is international standards on auditing. The answer would be A, because the international financial reporting standards, they rule out. You first deal with an IAS. You first deal with the financial reporting standards, and then when you're doing your auditing, you're being guided by the international standards on auditing. Then looking at the third one, for it, it looks at what does accounting follow. So accounting is going to follow the IFRSs and the laws that require an entity to keep proper books of account and prepare financial statements in accordance with the books of accounts. Then we are having the auditing. With the auditing, I already told you it involves examination. So it's going to deal with the examination of the financial statements and confirming whether they are in agreement with the books of accounts and whether the books have been properly kept by the entity. So this is to do with examining. This is to do with bookkeeping and preparation of financial statements. Then the last one is to do with the preparation of these financial statements to show a true and fair view and compliance with the relative IFRSs and the laws, and this is to do with examining the financial statements and expressing of opinions that show true and fair view of the financial position, performance, and cash flows of an entity, and also that comply with the relative IFRSs and laws. So having looked at that, why do they demand for auditing? So auditing is everywhere, and auditing is used in the day-to-day life. So with auditing, it is demanded for in order to improve the stewardship. Now with stewardship, the meaning here, it means to look after one's resources or property, And then it also improves agency accountability, where a manager of an entity is separate from the ownership, i.e., where directors are not the shareholders. And it's told us to see the diagram. So that's how it looks like. So with this, agency is just a relationship between the it's to do with the relationships of another party entrusting another party to provide its service to maybe a third party. So that is to do with agency, deal with that trust within certain parties. So that's one provides a service on behalf of the other. Then accountability. Then also we look at accountability. We demand for auditing in order to improve on the accountability, and it's an auditor that through the audit that he can carry out, it will show the level of accountability of these managers. So just by the diagram, the principal has to the principal employs the agents that are going to manage the resources and also provides the capital. Then when it comes to auditors, this side is going to hire these auditors that are going to verify the financial statements, and then in return the auditors are to give audit reports that give assurance to the shareholders, and what the shareholder expects from the agent that he has employed is to show accountability for resources being managed. Then another thing that the principal expects from the agent is to do with accountability of the resources, and also is expected to report to the principal to show how they are good stewards. Then that is with that, and with the agency's theory, agents do not work in accordance with the principal interests, so they have their own interests. So with the agent's theory, it says that agents can also get to have their own interests, and they end up not working in the interests of the principal. So that is why most of the times you would find that they would demand for auditing to verify the financial statements which were earlier on provided by the agents. So we can look at some of the financial scandals that are happening in auditing. So however, in the recent years, auditing profession has been under public spotlight due to the financial scandals. So these financial scandals have led to collapse of companies. For example, Enroll in 2001. So what happened here? The managers of Enroll deceived the investors by fraudulently overstating the profitability, and Arthur Andersen, as one of the auditing firms that was big at that time, it being an external auditor to Enroll, did not objectively evaluate the accounting policies. As a result, Arthur, one of the big 5 audit firms, collapsed after the demise of Enroll. So after the collapse of Arthur Andersen, we remain with the big 5. So now we are having the big 5, and the big 5 include PwC. Then we're having Deloitte, which is Deloitte. Then we are having the KPMG. Then also we are having the Ernst and Young. So now we are having the big 4, and with these 4, PwC is the biggest and the strongest. It's having a strong established audit client base. So that is with that. Having looked at that scandal, society has questions has questioned the effectiveness of an audit and auditors' role in helping to protect or at least provide warning of corporate collapse in future. So because of that, now the auditors are being audited also. So the in Uganda here, such even the close supervision on has been conducted on the auditors in order to increase the independence and objectivity. So for example, the institute in Uganda which audits the auditors is the Institute of the Certified Accountants of Uganda. So having looked at that, we shall begin from there. Next, we shall be looking at the assurance and advisory services being provided by the auditors. So thank you so much for watching. Make sure you subscribe to the channel.